This week we've probably got a bearish pattern emerging, not confirmed yet, but give it a session or two and we should be able to confirm that. Now, just to sort of support a bearish move that's occurring here, we're looking at the 10-year treasuries, the US, and normally when these are moving down, we'll see stock moving down. So we pointed out a few times now that that this particular pattern that we were looking through here appeared to be corrective, so it would be part of this stronger move down through to here as such. So this market obviously is placing pressure, and there's further to go down. So while these are moving, while the treasuries are moving down, we're going to be seeing the 10-year notes moving higher, along with the bonds, and this is the daily chart as well, and this is just pointing out that we've had a correction here at the 25 level here, the 125, and we've been observing this market moving further to the upside. So it's in this wave 3 at the moment. So while this market's moving up, then that the S&P 500 is going to be doing pretty much the mirror opposite as such. And looking at the S&P 500 in terms of the bigger picture, we've got this current move down through to here. It's not confirmed to be in 5 waves yet, but it's likely to, and we'll look at that in a moment. But in the bigger picture here, we've sort of tentatively been, waiting for this correction to unfold. We thought that wave 4 may have been into this little area through here, and we'll be pushing higher up through here. But this particular pattern in here, yes, it could be turned into a bullish pattern, but it also carries a bearish pattern as well for a B wave here, in terms of an A wave here and then a B wave over here and a C wave over here. Anyway, basically, if this market does fall out of bed, this is where we're looking at. We're looking at the wave 4 of one lesser degree through here, or at least, down a bit deeper into the 1800 here. So the DAX and the FTSE and the Australian market, they can all follow suit as well, because in their odd little ways, they've all got sort of tops in play here as well. None of these tops are confirmed yet, because we do need an impulse wave to the downside. So in looking at an impulse wave to the downside, we'd like to see from this high here, we'd like to see 5 waves down through to here. We can see that this is the strong 3rd wave here, so we're looking at this being the 4th and then the 5th down to here. So if we do get those 5 waves here, what we can be assured of then is to see a retest in 3 waves back up into this area through here, and then we'll be on our way back down from that point there. So, if we've got long positions in the market, first of all, observing this move down, if I just go into this more of an intraday picture here, now so far down from the high here, it can be counted as an ABC really, in terms of an A and a B and a C here, and then we could just move straight up from here. Now that would be nice and solve a lot of problems, but it also has the potential to turn into 5 waves, which would be the wave 1, 2, 3, 4, and then down for 5. So if we see this in the next session or so, then taking out this low here, then we can look at an A and a B and C bounce from this point. May not come this high, may go a bit higher. Would need to work through the actual pattern itself, but once it's completed, we'll see a stronger move to the downside as a probable wave 3 to the downside. So this is pretty much how it stands for the S&P 500. The Dow Jones is in the same boat as well. It hasn't produced 5 waves down through here, and it's always nice to see these 5 waves on the cash market as well, futures and the cash as well. So they'll just be easier to count. But look, failing at 16,500, which is a medium level, and then a move down roughly to the 16.3 area, maybe higher than that, of course, because of this, but basically piercing a new low below here, and then a retest either to, if it drops to the 6.3, then we know it's weak and it will struggle at the 6.5. If it doesn't come all the way down through here, then it may come back up to this level of supply up here at 16.6. So it's something to watch out for. But the main point here is the 5-wave structure developing through here. And the DAX and the FTSE, the European markets, can be the same as well. Now I've got this whole pattern here as a wave 4 completed here, but it may not be the case either. You know, this can be over here, this A wave can be to here, in having 3 waves to here, and pretty much having the B wave over to here. Look, it's just a complicated correction. It's having problems at the 10,000. We need to be mindful of what can occur. And once again, this little move down through here is the same as the S&P 500, and don't worry about all those too much, but basically we're looking, in fact this one here appears to have made 5 waves down already, so we'll be looking for a 3-wave counter trend back up into the 97 area, and then a move down from that point. So if we're looking at this in a bit more detail in the hour here, we can see wave 1, 2, 3, 4 and 5 here. So we should see an A and a B and a C wave moving back up into this area here somewhere. You know, let's just see how it sort of develops. So we could say that the European markets are leading actually. So that's something to have a bit of a look for here. But either way, a bounce off the 96 here and looking for 5 waves to the upside. The FTSE here as well. We'd been counting 5 waves from this low through here and trading up this way through here, and look, those 5 waves can also be completed with a 5-wave move to the downside and back up. Now look, as I mentioned, I'm talking bearish, but you must understand that we don't have, you know, confirmation. It's just a probability, possibility, and we need to basically be aware of it and then prepare for it as well. We need to know, well, you know, this market is actually trending up and we should be staying with it. There's a possible top here. What does that mean? So obviously this particular market is going to follow the DAX. So it'll be interesting to see how it, you know, if the 6.8 here became the retested resistance, then we would see it as, you know, being bearish at that stage. And, you know, you can see the 5 waves down here, the 1, the 2, the 3, the 4, and the 5 through to here. But this, I have to say, this little move up here, it does appear to be impulsive. It's not really corrective, this little move up here. And I have pulled it apart and it counts impulsively, but let's just see how it works with these current highs here as well. Okay, so for the Australian market, the FTSE here, the ASX 200, this is just a daily chart, and this is a possible daily chart bearish count as well as an ending diagonal triangle been happening from this low through to here as a 1, 2, 3, 4, and 5. It's possible, and when we look at this particular pattern in through here, it can be counted as bearish or it could be counted as positive. It just needs to confirm itself either way. But on the bearish side, this would be down for 1 here, back for 2 here. This would be the 3rd wave down to this point here, and the 4th wave to here, and the 5th wave to here. So this can be the A, the B, and the C wave back up to here and fail from here and work down from here. But I'm also quite conscious too that this can also be counted as corrective in terms of an A wave there and a B wave here and a C wave here. So we would need to, and we have been working this to the upside as being positive, and it is positive. It's very sluggish, but it is positive. But we need to look for weakness here, because really this is a move down, coming back up and retesting the 5.5, the strongest number area in this area here. So, you know, any further breaking down would, you know, you need to be, so 54.50 here. This is 1 point here because this market works quite well with every 50 points as well. So this is resistance would have to sort of put you on that side. It could get a bit bouncy here. Technically, the 54.30 area here, these two lows here being breached, would create overlapping wave structures through here. So then we would have the bearish move through here. So the 54.50 is sort of a sentiment type of, positive or negative being on that side. The red line here at 54.30 starts to confirm that we've got bullish, bearish price action. And of course, on the intraday here as well, we can see that the market's above group 2 here, the 65.72 and the 80. So we could say that if the market dropped through here and found the group 2 as resistance here, then that would also be another degree of bearish structure as well, and perhaps you'd need to have a position on that side of the fence. But while the market is above the group 2 area here, and the US did close up overnight, it is positive, so we can expect it to perhaps stay up above this, but this would be the first point of weakness that you should be looking for. So the 54.72 as a retested resistance is the bearish side, and if this market finds support on the 5.5, then we'll be tinkling with a more of a positive view of this market. But I think that today's price action is going to be a little bit meaningless, and we really need to see how the US, if it breaks a new low tomorrow, to help confirm that bearish pattern. So we won't be going very strong on the long side today, and we also need to start considering with our trades in the market, our CFD trades, to do some quick adjusting there. If we get a bearish picture, we need to exit longs as quickly as possible and get some shorts in there as quickly as possible. So it's quite a big effort to change trend, but you need to stay light and flexible and protect profits and potentially be on the short side to make money as well. So all right, that's that. Cheers.